Hi everyone, Arthur Wilman with Wilman Financial. Today I want to talk to you about something that I want to get out into the open for a while, because when I start talking to people about their life insurance needs, they are very quick to say, hey Arthur, don't worry about me. I'm okay. I've got insurance through my work, my workplace benefits. So tell me, has this ever happened to you? Do you have workplace benefits and you're of the opinion that that's sufficient for you? Please let me know. Write a comment in the comment box below. Also, please be very kind and give this video a thumbs up, a like for me. It really helps out my YouTube channel. Now, I advise businesses on their group benefits or employee benefits all the time. And let me be clear, I love group benefits. I think they serve a vital function. But if someone is relying solely on their group benefits or employee benefits for all of their life insurance needs, they may be severely underinsured or may not have full control over their life insurance benefits. I want to take a minute to talk about some of the good things about group benefits and then touch on some of the not so good things about group benefits. Firstly, the good things with the group benefits is that often they're included with your workplace benefits at no extra charge. They just come with the work that you do. Most people don't think about it. They're already set in place. The other thing is there's no medical underwriting with group benefits. If you are in poor medical shape, you still get them, whether you want to or not really, because you're an employee of the company. Now on to some of the not so good things about group life insurance benefits. Firstly, a lot of people have no clue what their insurance covers, how much they have for life insurance coverage through group benefits, and they don't know if that's good enough for them. They haven't really thought out how much life insurance coverage they really need. And then I'll touch on the fact that group life insurance is controlled by the employer, and the individual employee actually doesn't have that much control, has little to no control over group life insurance benefits. So going back to my story where the prospective client says, hey, don't worry about getting me some extra life insurance. I have enough through my workplace. And my first response is, that's fantastic. That's great. Some life insurance is better than no life insurance. But then I go on to ask the prospective client, well, how much do you actually have? And it's at this point that the client says, well, I don't really know. They seem a little stumped. They've never really looked into the group life insurance benefits. Group life insurance is usually offered in a couple of ways. Either it's a flat death benefit amount, like $50,000, or it could be a multiple of your annual earnings. 1 times annual earnings is the most common benefit offered. Next is the question of how much life insurance is needed. Is that flat death benefit amount of $50,000 or 1 times annual earnings enough? Consider for a moment, you have a young family, 2 small kids, maybe a large mortgage to pay. Are those amounts sufficient? These are questions that I might ask someone who initially tells me, hey, don't worry about it. I've got enough life insurance through my workplace. Because after all, 1 times annual earnings is 1 times annual earnings. If you pass away, sure, the insurer may pay out that 1 time annual earnings, but after that, your income is gone forever because you passed away and your family still needs that income replacement. Typically with an individual life insurance policy, I'd suggest at least a few or several multiples of annual earnings to be in place for insurance to cover liabilities like mortgage, like young children's costs, or the costs of going through childhood, and of course unexpected expenses that may arise. Next is the issue of how portable and how much control do you have over that workplace life insurance policy. So going back to my scenario, I'd ask the client, the prospective client, well, what happens if you change jobs? What happens if you go self-employed? What happens if you take some time off? Is that life insurance policy still in place? Do you have access to that death benefit if you would pass away? And typically the answer is no. If you change jobs, the life insurance policy stays with the employer. It does not follow you to your next place of work. You can always say that, oh, I'll pick up another life insurance policy at my next employer because they'll offer workplace benefits. Well, you might and you might not. They might have poor benefits in place, they might be downsizing, restructuring, in which case they might be pairing off benefits, which is out of your control. At this point, it should be clear that the worker has little to no control over their workplace group life insurance policy. So to summarize, I want to ask you, the viewer, do you want to rely solely on your workplace life insurance benefits, where the benefit can be minimal and the control that you have over the policy is little to none for your sole life insurance needs? At Wilman Financial, we offer a broad spectrum of life insurance solutions for all sorts of people. If you want more information, please get in touch with me. My information is available on our website, WILMAN.CA, or you can reach me on our Facebook page at Wilman Financial.